Hello again, everybody. This is Mike with the PTU Options Mastery Program. In this video, I thought I would take a look at a few of the recent trades that we've closed out using our free reversal system. So if you've seen some of my videos in the past, you know that we like to trade some of the most active names. Names like Apple and Google and some of the index ETFs. Those are the most liquid products. They're the most popular by active day traders and by swing traders and position traders. They're just very, very active names, and those are the names that I want to be involved with. So the reason I want to show Apple, Google, and the Dow ETF here today is because those are the names that are available to you with our free reversal system. It's a comprehensive system. It's a system that prints a roadmap on the chart for you. So regardless of your level of experience or your level of knowledge of the markets, you can take this system and very quickly get a feel for how the markets move. Because there's no guessing where to get in and where to get out. Everything is outlined for you. So let's dive in and take a look at a few of these trades. So we're taking a look at Apple here to start. And this chart is using a range of 6.25, and you can see that in the upper left-hand corner. What that is telling me is that every one of these price bars that you see on the chart, each one of those bars represents $6.25 of price action from high to low. Okay, so if I click on any one of these bars, if you take a look at my data window over here, the difference between high and low is always going to be $6.25. Now, something else to point out here is this has nothing to do with time. Okay, we've talked about that in the past as well. I know many people start out looking at time-based charts, whether that be an hourly chart or a daily chart. Those charts are forced to print bars based on a set amount of time, regardless of how active the market is. The reason you can get in trouble with those charts, if the market's not moving, if the market's not very active, that chart is going to continue to print price bars based on that set amount of time. Well, when we compare that to a range-based chart like we're looking at here, Apple, as long as Apple is moving, we're going to see bars printed on the chart. If Apple slows down and starts to get a little choppy, this chart is not forced to print bars. So what it does is it acts as a built-in chop filter. We're not going to sit there and force the chart to print bars unless Apple's moving. So it's a really powerful approach to the markets that a lot of people, they're just not familiar with and not used to using in their own trading. So it's a very powerful way to approach the markets that's very different than what a lot of people teach. So we're looking at a range chart of 6.25 here. Notice that we do have a whole series of dots and a plus sign here. Those represent our entry and exit points. So when we get everything to set up for us, the system's going to print a plus sign here on the chart representing our entry point. It's going to print a series of dots representing our targets, and it's going to print a stop price down here, down below price action. That acts as our worst case line in the sand stop price. Okay, now what gives us this setup? What makes a long setup here? This setup right here is telling us to buy Apple. Why is it telling us to buy? Well, we're using our %R indicator down here at the bottom. This is a pretty standard indicator in most charting platforms, but we use it a little bit differently. We actually use a few different settings based on what we're looking to do in the markets. So when we use the %R indicator, what we're looking for here is extreme overbought or oversold market conditions. If we get below 10 on our %R indicator here, that's oversold. If we get up above 90, we consider that overbought. So if we take a look at Apple here, we got oversold. Okay, got a little overdone on the downside. Our %R indicator told us that we're getting to an extreme reading. And what that tells me is that, all right, the market, in a lot of cases when we get to these market extremes, markets are overdue for a pullback. And when I say pullback, we're talking about a retracement in the other direction. So when I get oversold here, that doesn't mean I just jump right in and buy the market. Doesn't mean I just jump right in and buy Apple. The second step here is to wait for a close up above our signal line, which is this blue line moving across the chart. You can notice that we got oversold on %R down here. We got below 10. We got to close up above our signal line right here. That gave us our long setup. told us exactly where to get in on Apple. We have plenty of time to get our order in. Now, in this case, could we come in and could we buy the shares of stock? You could. Okay, I don't have a problem with you taking that approach. The problem with it, in my book, is that just ties up way too much capital. With a $500 stock, it requires a decent amount of capital to put on that position. So what I do on these high flyers, I use options. I use some call options here, and instead of just coming in and buying an individual call option, which would give me control of the upside, I actually went ahead and I put on a call spread. So what I did is I bought the 505 call in February, and at the same time I sold the 530 call. Okay, so what I did here is I put on a position that gives me control of the upside, but I'm also able to get into a defined risk position because I'm also selling my 530 call. So by putting this position on, okay, as soon as I get into this trade, I know exactly where my worst case loss would be. I know what my best case scenario would be on the upside if it does hit full target. So it's a really nice position to be in. So I bought this position for $7.58. So for each spread that I put on, that's $758 per spread, because each option gives me control of 100 shares of Apple stock. Now I sold out of that position once we hit the second target. Okay, we got into this trade on February 3. I hit target here on the 11th. So I sold it out for $19.10. I booked over $1,100 of profit. That gave me a 152% return. Okay, that's a phenomenal trade. Okay, is every winner that we take, a 150% winner? No, this is definitely a big win for us. Okay, so it's a great way to get into Apple. Now, a typical win, we'd like to target anything in between the 50 and 80% level is typically what I'm looking for on my winners. Okay, so obviously we will see times where when everything lines up just perfectly, we do see those home run trades, and 150% return for me, I consider that a home run trade. It's exactly what I'm looking for. Okay, let's jump over and take a look at Google. Okay, very similar situation here on Google. We did get oversold here on %R. That had me looking for a long setup. Okay, so the long setup, the second step that I needed to look at was a close up above the signal line. Okay, which we got right here. The calculator, which is the tool that prints the setups on the chart for us, it knows how to read everything automatically for us. So we don't have to sit there and calculate where our entry point would be or where our targets and stop would be. Everything's done for us. We still have to actually go in and manually take the trade, but as far as the entry and exit points, the roadmap is printed right on the chart. So we got into this trade. Now, I have to say this before we get into the trade in more detail here. I actually did not take this setup. I tracked it. Okay, the reason I didn't take it live myself is we had earnings out on Google. Now, I personally don't like to trade earnings. I have students that have no problem trading through earnings season by trading options. The nice part about these strategies, you know what your worst case scenario would be, and if you want to put on a position with a comfort level with the risk, I have no problem doing that. For me, it's not my style. It's not what I like to do. So I tracked this trade. Okay, I was looking at a call spread here, very similar to what we looked at on Apple. Okay, so I bought the 1145 call. I sold the 1175 call. Okay, so I put this trade on. Now, Google, I mean, it's a very pricey stock. Okay, I mean, we're looking at a $1,100 product at the time of the setup. So it takes a lot of capital. A lot of people will shy away from these names because they don't think that they can afford the position. The options allow us to get in for a fraction of the cost. Okay, I put this position on. Total cost here was $1,330 per contract. Okay, so it is pricey, absolutely. The nice part about products like Apple and Google, you can trade mini options. The options that I'm quoting you here are full-size options that give you control of 100 shares. The mini options control 10 shares, so you can get in for a fraction of the cost. Okay, so this position, it did hit full target. You can see it was a really nice move to the upside. It was a 55% return. Okay, return about $700. But again, I did not take it. In all fairness, I want to be transparent here. I did not take this trade personally. A third trade that I actually did take was on the Dow ETF. Okay, now again, very similar to what we just got done talking about on Apple and Google. We got oversold here on %R. We got to close above our signal line, which gave us the long setup. I took the setup as soon as I hit my entry point. Okay, just because I set up prints on my chart does not mean I jump right in and take the trade. I have to wait for that entry point to be hit. So once I hit my entry point, I went ahead and I bought the February 153 call. And I bought it for $3.30 or $330 per contract. So a very manageable cost for people of all account sizes. Now in this case, once I hit my first target, notice we did move the stop up to break even. Really nice feeling when we're able to do that. Fortunately for us, the stop didn't come into play because we hit our full target here. And I sold out of my position. I booked a $165 profit or a 50% return. Now the great part about this trade is we were in it for just over 24 hours. I mean, it was a very, very quick trade, in and out. Every trade is not that fast. Our typical holding time is anywhere from 24 hours in this case on out to 2 weeks. That's our sweet spot. Okay, so really, really nice trade there. So 3 trades, I showed you 3 winners. I took 2 out of the 3. I took the Apple trade and the Dow trade. I didn't take Google due to earnings. Now, setting up for next week, notice that on this move to the upside, the market has been very, very strong over the past week or so. We've actually reached an overbought level on %R. So we're overbought here on the Dow. Okay, notice we briefly had a short setup here. We had plus signs printing. That trade was valid, but notice here, before we hit our entry point, before price action got down to our plus signs, price action closed right back up above my signal line. As soon as it does that, the trade is off the table. The trade is canceled. Now, if we get a close below the signal line early next week, you will see a short setup reappear. Okay. Once we close below that signal line, that means all of our criteria is met once again, and we can look to get short on the Dow. If we go back over to Google, notice here, very similar story. We were overbought here on %R. We briefly had a short setup. It never triggered in. Reason I know that is because price action never got down to our plus signs. And here to end the week, here on Friday, we did get a close up above the signal line, so that trade canceled. So heading into next week, we will need a close below our signal line. If we get that here on Monday or Tuesday of next week, we will look to get short on Google and play a market pullback. And then on Apple, nothing for us to do here on Apple. And the reason I know that, well, the calculator's not printing any setups on the chart, number 1. And number 2, notice down here, we don't have any extreme readings on %R. I'm not overbought. I'm not oversold. So there's nothing for us to do on Apple. Okay, we're in a holding pattern. We're going to sit still. We're going to wait for an oversold or overbought condition to print, and then we will look to get active once again. So this setup, it's not designed to be in the market 100% of the time. We're waiting for those major market extremes. Okay, if we get one of those extremes to set up, well, we know that we're looking to get involved here with the reversal setup. Okay, so the 3 products that I shared with you here today, I'm willing to share the system. The calculator that prints the roadmap for you, tells you exactly where to get in, where to get out. I'm willing to share that with you here at no cost. Okay, it's an extremely powerful system, and I want to make sure you have access to it so that you can start to experience some of these gains that we've seen over the past couple of weeks. So just go ahead and visit this site. You can see it here. Let me shrink this down so you can see the address. So it's premiertraderuniversity.com/free options reversal. Okay, all you'll have to do is visit this page. You can go ahead and click on the link here, and you'll be able to download the full system that I just showed you on your charting platform. You do have to have access to either TradeStation or NinjaTrader. Those are the 2 platforms that the indicators are programmed for. Okay, so if you have any questions at all, while reviewing the material or this video, feel free to send me an email. My email is mike@netpicks.com. I would be more than willing to connect with you and discuss in more detail how we approach the markets with options using the PTU systems. All right, so I'm going to wrap this video up here, and I'll be back with you guys next week.